So, all right, here we go. All right, so our methodology, it's very simple. What we're trying to do is look for long-term and reliable resources for market information and analysis. We also want to understand the science that they're using behind that analysis. All right, and so the logos on the right-hand side, those are just some of the resources that we have used and pulled from in order to put this together. What we're trying to do is provide you guys with real-world, actual information that doesn't have an agenda. All right. So disclaimers before we go. Nobody can give you perfect advice. All right. Not me, not Andrew, not anybody. If anyone is telling you they can give you perfect advice, run far and fast from them. All right. This is what we're seeing take place. Right. That's what we're presenting to you today. This is what the science has to say. And based on all that above, this is the best advice that we can give you as of today. So let's open it up to questions. If anybody has any they want to type into the chat box, we'll check those out. I did have a handful that had come through earlier, Andrew, so let's go ahead and try to knock off a couple of these real quick. Let's start with a lending one. I think you kind of already spoke about this. They're asking how easy is it to get a loan? They're hearing that basically no one can get a new loan because of the refi. Is there anything that you want to put a finer point on that, or you pretty much covered all that?
Well, it's hard to know the context of nobody can get a loan. I mean, we're doing so many loans right now, like more loans than ever. I mean, I think our team will get over 100 loans in the pipeline right now, just for my team, you know. So I think I did speak to the long lines, so to speak. I gave this sort of Costco analogy, and everybody wants to refinance. I gave this idea of just to give people a sense of how much mortgage debt is out there and how much is in a window where it does make sense to refinance. And the industry as a whole literally does not have the capacity to do all of the loans. What it means is that relationships are going to be more important than ever. I mean, just to be totally honest, I mean, you know, I've got a massive past client database, and I'm serving those first, those people who I have a relationship with. There are only so many hours in the day. So just take this just from a loan officer who also manages a team of other loan officers. Take this as a person who just is a person out there grinding every day trying to provide for his family, but who's a professional in the mortgage business. There are only so many hours in my day. I just can't, right? So if I have 100 people call me today, I just physically cannot handle all of that. Mm-hmm. And a huge chunk of those people who call me randomly today are people who are just looky-loo shopping around going, hey, what's your rate? And as soon as they hang up with me, they call 2 other people and go, what's your rate? What's your rate? And it's like, listen, you know who I'm going to take care of right now because I've only got so many hours in the day? The client who I closed last year, I helped him buy his house. I know him and his wife and his kids. He appreciates me. I enjoyed working with him. He calls me and he says, hey, Andrew, you know, last year you helped me and my wife buy this house. We love it here. And I'm giving you the other end of the spectrum, right? You know, and we heard rates are low, and I'm like, absolutely, it's a great time to refinance. Send me over your latest mortgage statement, your proof of insurance. I'll crunch some numbers, present you with a couple of options. It's like battlefield triage. Like that's who I'm going to help first. I can only help so many people, and I promise you, it's not to be mean or disrespectful. I just understand, like, that what I just articulated is going through the minds and daily routines of 1,000 other mortgage professionals as well. So if you say like, hey, it's impossible to get a mortgage, the industry is overwhelmed. We as an industry cannot keep up right now. And so I will tell you that what we are doing, though, for sure, is we definitely prioritize our purchase loans. And I would tell you that not all banks and lenders do that. Because, you know, when you're under contract to purchase, there's a contract and there's a timeline that you are contractually obligated to close by this time. Otherwise, the seller could cancel on you, or there could be financial penalties, et cetera. So those get the first of our attention. The refinances, if we've locked in the rate and the rate's protected for 60 days, we can close that one in 40 if we have to. We're not taking that long to close refinances, by the way. But I'm just saying, what we're doing is we're having to manage our capacity that way. So you might be experiencing that. It is still possible to get a loan. I'll give you a little insight. I mean, this is going to sound corny, but if you call a mortgage company or somebody needing help to get a refinance, be nice to them. People in the mortgage business are just overwhelmed and exhausted right now. And a little bit of appreciation goes a long way. I'm just telling you. Look, I rise above that every day. I get people that call me and they're like, well, look, man, I just want the number. Can you give me a number? And I'm thinking here going, oh, this sounds like a lovely person. I can't wait to work with them, and I got a line 100 people along of my past clients who know me, like me, and I like them. Like, who am I going to help? And that's just human nature. And I'm not trying to be mean. So, but just a little piece of insight,
Yeah.
If you are kind and appreciative to some mortgage folks, they may be more willing to help you just because they're tired and just would love to be appreciated. So
yeah, that's not what you know, it's who you know. I agree with that. All right, another one that came in: are we expecting to see home values go up or down? I think we addressed that pretty well with the last part of the slide, so we're not going to go back through that one. Are we expecting to see a lot of distressed properties? All right, so I'll hit that from my side, and Andrew, if you want to add on to that. Basically, through everything that we just laid out, no. That's the simple answer, right? We talked about the equity. We talked about the $177,000 being the average amount of equity in someone's home that they have a mortgage. They're just not walking away from it. We look at the amount of equity that has not been removed from the property. I just simply don't see this coming. There are not going to be, at this point, a bunch of foreclosures, short sales, things going along those lines. Things can obviously change. Andrew, are you seeing anything on your end with any flags that are popping up for that?
I'm not yet, but just know that there are likely to be some people in distressed situations, on a macro scale. Remain to be seen how San Diego and Southern California is affected specifically. It's absolutely going to depend on how the rate at which different governors reopen their states and get people back to work. But absolutely, there are going to be people who their job just doesn't come back, or doesn't come back in time where they can save their home. And it's unfortunate. I've lived through this. I've seen this. I've experienced it personally. So there will be some of that. And some folks who I mentioned earlier take the forbearance or skip some payments because they're struggling financially right now. Again, for obvious reasons, not through financial mismanagement, not through I don't give a rip and don't want to pay my bills, but through actual hardship. Okay. There are going to be people who are casualties of this, unfortunately. And I think that on the other side of the coin, as I mentioned earlier, that's going to create some opportunities if you can maintain your credit, if you've been saving for the future, you've got some reserves. And that won't be everybody, but, look, keep making your payments if you can. Keep your credit clean, because there may be some opportunities, unfortunately, as a result of some other people having some hardships. But that's the ebb and flow of economic cycles. Okay, this is just the seasons that happened, and you can look back and see these cycles. And so if you can prepare for these cycles, maybe you can also be in a position to take care of the future of your family when some of these cycles down cycle, and you can step in and maybe pick up a good deal here or there. So I do think there will be some of that.
I think there's going to be some. I think the other part of that is going to be, that is a positive for us, right? In 2007, 2008, the government sat on the sidelines. They did nothing. They did not step in. Federal government and state governments and city and even county governments are, at this point, they have stepped in. There's the forbearance. There is the whole pause on evictions. There's the stimulus. So the government is actively involved, which I think will stem that. But there are going to be people that are going to have issues. And I do not think we're going to see it like we saw it in 08, 09. So, all right. So next one, let's see. How are you getting business? I'll let you start with that.
I mean,
is there any change for you guys with this?
Are we getting business?
How are you getting it?
Where am I actually getting it from? Where's my actual business coming from? I mean, I've been in the business for a long time, relatively speaking. I've been call it 13, my 14th year in the business. And so I would just, the medium length answer to that question is, I've never been somebody who's just been strictly transactionally focused. I've built long-term relationships with my past clients and tried to stay in touch over time and continue to nurture those relationships and stay in touch. And so right now I have the benefit of a database and 13 going on 14 years in the business of compounding relationships. So I have a lot of past clients coming back to me, and, I take care of them, and they say, I do a refinance for a past client. and I get done and they go, hey, I'm going to send you two of my buddies at work right now who just heard about the deal I just got, so it's, for me, it's all referral.
Mm-hmm.
It's referral, and then just doing your best to take great care of each person, such that they refer you. I mean, so to answer your question, that's how I get my business.
Mm-hmm. Yeah.
So.
Yeah. On our end, it's all online at this point. When the offices are closed, we're not doing in-person open houses, so everything is online. There's a Navy couple out in Hawaii. They're being PCS to Miramar, right? And they found us online, answered the phone, and now we're off and running looking for something in Poway. So that's kind of how we're looking. Another question was, are we seeing a lot of deals dying? Do you want to start us off with that one on your end? You guys seen
So far, I'm not. Although I did just have my first turned down as a result of the forbearance. It was a client that was referred to me by another past client of mine, and they wanted to do a refinance.
Mm-hmm.
And we collected all the paperwork. The numbers made sense. They were almost giving them a smoking deal, 0.5% lower than their credit union, which, usually credit unions are really strong rates, but I don't know. So she's like, oh, we would love to go with you. I'm like, great. So we start working on everything. And then like through conversation, she goes, oh, by the way, one of my rental properties, they have two rental properties, is in forbearance right now. And I go, ooh, okay. I don't know if we're going to be able to do your loan. So it's just the rental property, not your primary residence, that we're doing this refinance on? She's like, yeah, not the subject property, not my primary that we're refinancing with you. It's our rental property. I'm like, all right, well, maybe we'll be able to do it since it's not the subject, right? So, let's keep going with the process here. We went like another 2 days, and all of a sudden policy came out that it's if the borrower has any property in forbearance. And so that's the only situation for me. Now, in terms of loans under contract, like to purchase deals, I haven't had anything fall out yet. Nothing yet. But I think, look, if somebody loses their job, I mean, that's a material change that I think, I mean, they can't buy. They can't get the loan. I mean, that has not happened to me yet.
Yeah.
But as the unemployment numbers continue to go up, you can bet you'll see more of it. It will happen. And some people who were going to buy may go, listen, I'm furloughed. My boss says that we expect to be rehired within a month or two. But so as of right now, we're going to put this home search on hold, which makes sense, right? I mean, if you think, so anyway, I hope that answers your question.
Yeah, no, that does. On our end, we know that they are happening. We haven't seen any of them as a team or as a group. When this initially happened, we had quite a few sellers that were ready to come on the market about a week or two after that, that hit the pause button. But other than that, we really haven't seen that. I think a lot of it goes to the way that we will pre-qualify people. So it's a thing, if we're representing a seller, there are hoops that buyers have to jump through at this point to even get into the property. The level that we're vetting buyers at, the level that we're vetting their lenders at, are incredibly high originally, and now they're becoming even more stringent. When it comes to us working with buyers, we're basically applying that same standard, but to our own clients, so that when we do write an offer, we've already checked all those boxes. And that's something that I'm continually communicating with the listing agent in that scenario. So I know it's happening. We're just not seeing a ton of it. Next question was, how are you guys being safe out there doing business? So I don't think you guys aren't out in the field very often. So not a super huge lending question. In terms of what we're doing, we basically are respecting the social distancing to the absolute best of our ability. A lot of our vendors, photographers, videographers, home inspectors, appraisers, they're being very clear that they do not want people in the house while they're working. Other than that, we've moved a lot of stuff to being virtual buyer consultations, virtual listing or marketing presentations. I've spent more time talking to my computer in the last month than I have in a long time. So that's basically what we're doing. The face mask, we'll have gloves on and booties anytime we're in somebody's house. And that's basically what we have going on with the being safe part. A lending question, Andrew, someone asked, and I know a lot of these lending questions, no two borrowers are the same, I think would be a relatively reasonable statement. So situationally dependent, but the question was, should I lock my rate in now since they're so low?
There's an old saying in the mortgage business, and it goes back to what I said in the beginning about bird in the hand is worth two in the bush. I mean, a lot of experienced lenders will tell you this, which is if you like it, lock it. Okay. Little quote, whatever. It's the sorry, my computer is it's the bird in the hand is worth two in the bush. We cannot, the volatility has been pretty significant lately. And if you don't lock it, then if it goes against you, you got to hope it comes back. And the opportunity to refinance may go away forever because it may no longer make sense.
Yeah.
And what's that? And you know, if you refinance, if you lock it and the rates get a little bit better, it's like you still got savings. You still definitely got some savings. Mm-hmm. It's like you got a lot of juice out of that orange. Maybe you didn't get the last drop, but you got a lot, right?
Yeah.
Whereas if you don't lock it and it goes back up, you get none. You know, so mm-hmm. that's my take. I mean, if it makes sense to refinance. Mm-hmm. Most of the time what I've seen, not all the time, okay, but most of the time, those who go, well, maybe it'll go from 2.75 to 2.5. You know, let's wait. You're trying to squeeze that one last drop and you end up losing out. So that, you know.
Yeah. All right, let's do one more. The one that came in was more of a realtor question, but let me turn the question around. I'll start with you and then I'll answer on the real estate side. Somebody's coming to you, they need to buy a house. They have to buy in the next 30, 60, 90 days, reasonable credit. There's no red flags that are immediately popping up. What's the best piece of advice you have for somebody who needs to buy and needs to take a mortgage out for that at this point?
Are you taking that one or am I?
You. So from the lending side, somebody that needs to buy, what's the best piece of advice you would give them currently?
Don't miss any of your payments. I mean, you know, don't do any of the forbearancing if you own any other properties. You know, that's the number one thing. Don't miss payments. I mean, people like right now figure, oh, it's a hard time. Maybe we'll understand. I mean, you could slam your credit, you know. That's the biggest thing. You can't control whether your company lays you off due to the economic hardships, but I definitely would not. Just what you can control is making your payments. You know, there's choices you can make. I mean, there's things you want and things you need. You know, some people go out and buy a new car and they love the new Beamer, but you know, the $600 a month car payment, well, there went your house. You know, so keep your expenses low. That's what I'd say.
Yep.
You know.
Yep. All right. Good deal. And then, so the original question was best advice I would give to somebody who's selling their home. At this point, I would tell you, put the house on the market. Put the house on the market. There are multiple properties that we have either had listed when this started or we have brought on the market at this point. They are all selling. There are no major price reductions and they're selling relatively quickly. So I would tell you that if your home is not on the market, it is not going to sell. A lot of sellers have asked about, what about running up my days on MLS? To which my answer is, whether I'm talking to a seller or I'm talking to a buyer, the days on MLS are becoming far less relevant right now. We need to be able to rewind whatever that day is to see where that relates to March 19th. Right? And so I think that if we get 2 months from now and we've come out of this a lot more completely, your home, let's say, is still on the market and all of a sudden it's been there for 78 days. If the agent that's representing that buyer, if the buyer isn't smart enough to look at that and look at a calendar and go, oh, well, it was on through the entire pandemic, maybe they're not the right buyer for your house. Right. And so that's the advice I would give you for people that need to sell. So I think we're well over time at this point. So let's wrap this up. Andrew, thank you very much for your time today. Do you have anything you want to end with?
I've given a lot of pieces of information, especially in the beginning. I don't want to over talk here, but you know, if you've got any specific questions, you can reach out. There's my email address there. I'm happy to help address any other questions you guys have. Thanks for having me here, Ryan.
All right, that sounds good. So That's all we got for today, everybody. Hope you guys got some good info. Those of you that had to pull off early, we are going to send the recording out and we're going to get this up on YouTube. Also, if you guys have any other questions, the contact info was just on the past slide. Thanks for coming, and we'll see you guys next time. All right, there you go. That is the short clip that covers the Q&A session from This Week in Housing San Diego, episode number 1. If you guys want to see other clips that are similar to this one or watch the full episode, the YouTube link is right there, youtube.com/c/Ryan Riell. If you guys would like to get on a Zoom call with me and my team to discuss this more specifically in your situation, the tinyurl.com/Ryan Team Zoom will take you directly to my calendar. We'll let you select a day and a time for us to get together when it's convenient for you. If you guys have any questions at all the contact info for both Andrew and I are right there. Look forward to talking to you soon. Take care.